Hello and welcome to the latest edition of the Tax Hour. This is one I've been looking forward to for ages. I've got Ray McCann here with me alongside Pete Miller, and we're primarily going to talk about Osmond and Allen, which has become quite a significant case, I think, among most of us advisors who cover transactions in securities. But to start with, we're going to go into some of the basics of transactions in securities and build up from there and talk about Osmond and Allen and our views or differing views as the case may be. So, Pete, do you want to start us off? Just give us a bit of a basic background to transactions in securities.
Absolutely, yes, I'd love to. So it's actually quite an interesting one because to me, transactions in securities is one of the most effective general anti-avoidance rules that the UK tax system, I was going to say HMRC, but of course it was the Inland Revenue, has ever put together. After spending most of the 1950s kind of doing the serial thing of, okay, got another tax avoidance scheme, let's close it off for the next budget, year upon year upon year, case upon case upon case. They said, let's just deal with the whole thing. So what was going on? At that time, you've got to remember there was no capital gains tax. So if you took money out of your company as a capital sum, as something to which a capital gains tax, if there were one, would apply, and of course there wasn't one, then you were saving all the income tax you might otherwise have paid. And probably, I mean, the case that is always considered to be the archetype is a case called Cleary, which is kind of funny because we always think about the transactions in securities exactly in clearance applications. But Mrs. Cleary and her sister each owned 50% of the two companies that their father had left them, and one of them, if not both, had substantial sums of money, and rather than pay themselves a dividend, they sold one to the other for, if I remember rightly, it was about £175,000, which was completely tax-free, but for the fact that at that time, pretty much brand new transactions in securities rules, Section 28, Finance Act 1960, now applied, and they were caught. But just to put that in perspective, 1961, when they did the transaction, was the year that my father started his first professional job, having passed all his professional exams to get that role, on £1,020 a year. Okay, so this was 175 times my father's starting salary. Think what your newly qualified trainees start on.
And with no tax.
Exactly that, that. So it was about taking, if you like, the profits of the company out in capital form. Why? Since we've had a capital gains or tax on chargeable gains since actually 1962, most people don't realise that. Is it still important? Because pretty much for the whole of the time that we've had a tax on capital gains, the rate has been lower than the rate of tax on income tax on dividends. So it's remained important. I mean, clearly in the case of Osmond and Allen, which we'll come to in more detail shortly, they weren't paying any capital gains tax because their shares qualified for relief from capital gains tax. So this was pretty crucial to them. So that's very much the basics. I mean, we can go into some of the technical detail if we need as we go through.
Yep.
But very, very broadly, I always say it's to stop you taking the profits of the company out in capital form.
Yeah, and I think with Cleary as well, you have to remember that at the time there was howls of protest that these two sisters weren't the taxpayers that the legislation was intended to catch.
Yeah.
And, as the court often does, it made plain that, it's what the legislation says and they were well within it. And the other curiosity, I suppose, looked at these days is that they never made any attempt to argue that they had done it for bona fide commercial reasons or they didn't have a tax avoidance motive. And people sometimes say, well, maybe if they had argued that, it might have been different. But Lord Denning, he dealt with that because I think he said, in effect, it was just as well. Yeah. So I don't think the court would have been sympathetic to any argument.
Yeah.
And it was on the back, the legislation came in on the back of massive bond washing and dividend stripping by banks and large companies, because the rules in those days were totally different. For banks, they were completely different. They didn't pay corporation tax as it was then on the interest returns that they got on bonds that they held, but they were allowed to claim losses if the bond was sold at a loss. So strip out the value of the bond by taking away its income stream. and you've got a huge loss, which then gets allowed for tax, but you don't pick up any tax on the interest. So things had to change.
And it is interesting to see that the focus has changed over where are we at now, 65 years, because now it's something we think about with every, generally speaking, owner-managed business transaction that we get involved with. And really, the big players are not generally mucking about with the transactions in securities rules. And I suppose part of that was the last big thing was occasionally being able to do share buybacks in pension schemes and get money back off the inland revenue as it was in those days, which I think Gordon Brown probably killed off. But
and that didn't go well for the revenue. You know. I still maintain we was robbed because it was my case at the time. So I had a vested interest in that being successful.
Absolutely. And I should mention, I'm sure his expertise will become obvious, has already become obvious, but will become more obvious as we go through. But Ray, at one point, used to actually be the guy in charge of the transactions in securities team before there was a one-stop shop. And the one-stop shop was Ray's idea. And in many ways, a very, very good idea. I'm not sure that the implementation has been quite what we all might have hoped for, but the idea makes perfect sense.
One of the big four at the time said to me after it had been set up that I'd kind of queered their pitch a little bit, because quite often they would put transactions in under Section 138, but not bother with a transaction securities request because they knew they wouldn't get it. And vice versa. But all of a sudden they were confronted with the fact that the revenue were looking across the piece. So it had its benefits both in terms of speeding things up and cutting down the amount of paperwork. Because at the time I was widely advertising that the revenue seemed to be the biggest consumers of A4 paper in the world, because that seemed to be what was happening. But once I left the revenue and I saw how much A4 paper was being used by the profession in drafting clearance applications, I sort of changed my mind.
Yes. And sending 3 copies at least. I think the reason I felt that it wasn't necessarily in implementation the best result is that when I was in head office and had a clearance role, which was the exempt distribution demergers role, so because everything was separate, I was in a department called Technical Division Company Distributions. God, it's so long ago, I've completely forgotten. And I was a fully trained tax inspector doing a technical role dealing with queries from around the network about company distributions. And what that meant was a part of my time was spent dealing with the number of clearance applications that came in. And so those of us who were in that unit, and I think there was a maximum of 2 people at any one time who were actually involved in these clearance applications, we were fully trained inspectors doing that. And what happened when the one-stop shop came in is they decided if you were going to be 100% working on that sort of stuff, they would kind of downgrade the work a little bit. So you still had what were then called fully trained inspectors in charge of the unit and maybe second tier of management, but a lot of the people reviewing the clearance applications, because it was 100% of their job and a lot of them were very routine, would be people who didn't have the full inspector training and would just train specifically on the job to look at these clearance applications. And in many cases that was fine, but in the cases that were slightly more difficult, it almost took a while for us, the profession, to train them to look at them more professionally and more technically sometimes. We got there in the end, well, until the regime changed or the group changed completely a few years ago, but we certainly got there in terms of a decently sensible relationship between, I think, the clearance team and the profession for quite a long time.
Yeah. Shall we take a little step back and talk about what we might apply for clearance for? Because we've talked about clearances, we've talked about the clearance unit a little bit. So most people listening to this podcast will be thinking, okay, when might we apply for clearance? So take the work we do within Jerroms Miller. We're looking at reconstruction, so demergers. We pretty much always have a clearance, Section 701 for transactions in securities. Company buyback of shares, you normally apply for a TIS clearance at the same time as a share buyback.
Management
buyouts, so share exchanges.
And sales to employee ownership trusts.
Yeah.
So
transactions in securities, to go really, really basic, you need a transaction and you need securities. So most of the time, the work we do, we're talking about shares, which is clearly a security. But obviously, it's way broader than that. We've got loan notes, debentures, stocks, things like that. So, and all of the things I've just mentioned are transactions. So, I thought
shares form the vast bulk.
Yes.
So probably 99% of transactions that come into the clearing system involve shares. Securities is a more glamorous word than shares, but I think the reality of it is that it's shares.
Yeah.
Yes.
Yeah, absolutely. Okay. Any other big cases we want to mention before we get to Osmond and Allen? Things like Brebner, maybe?
Well, I was going to mention Clark, first of all.
Yeah, I think it's worth maybe just quickly sketching out how the approach to purpose and motive changed over the years and, how that developed. Because obviously, with Cleary being the first big case, there was no discussion, as we've mentioned, about what the taxpayers' motives were.
Well, in fact, what I recall is they admitted first off that they'd done it for purely tax reasons, as it were.
Yeah. Should we also add here that the legislation as it's currently drafted has no, you mentioned about there being a commercial purpose. As it's drafted now, it just needs the main benefit. So to have a main benefit of an income tax advantage.
Yes. So if we go back to 1960, cast your minds back, well, Ray and I, we're old enough.
Just.
He says. So actually, the Hansard from Finance Act 1960 makes really interesting reading. And essentially, MPs were complaining that business would find it difficult to operate with this massive anti-avoidance kind of sword of Damocles. And so the ministers at the time said, well, let's have a system whereby if you're doing a commercial transaction, you can write in and we will confirm that we're happy that you're not trying to avoid income tax and that you can, and that you're doing it for commercial reasons. And they put a commercial reason test into the legislation, which I must admit, I have always felt completely unnecessary. If you think, for example, about the test as it still exists with capital gains, it's bona fide commercial purpose and not, to paraphrase, part of a scheme or arrangements to avoid capital gains tax, corporation tax, sometimes income tax. And I think, well, as long as you're not trying to avoid tax, why do we really need a commercial reason? And presumably somehow the people at HMRC in 2010, when the legislation was being rewritten, took the same view. So if your real test is, are you trying to avoid income tax? And 2010 made it absolutely clear that was income tax on dividends. Then did it really matter whether you had a commercial purpose or not? But they said very clearly, we're taking away the commercial purpose test, but obviously in most cases, the commercial purpose will be sufficient to demonstrate that your main purpose is not the obtaining of an income tax advantage, which is the current wording. So in most cases, they're absolutely right. Most people have got a complete commercial purpose. I have had cases with non-commercial purposes. Yeah. My favourite was a transaction where they were basically doing a demerger involving the company that great-great-grandfather had set up in sort of 1870. I think there were only 3 digits in the company registration number. It was that old. And they were desperate not to lose that company from that side of the family. So we had to do a transaction, a very counterintuitive looking way. And we were able to explain to HMRC that this was it wasn't a commercial motive, but it was a very strong emotional motive.
Yeah.
Bizarrely, 2 years after the transaction, somebody offered them 10 million quid, so they sold the company. So
I mean, in my time, I was really pretty anti the idea that the revenue would start arguing about commercial purpose, because it was just a waste of time. Because if you were looking at a transaction and you concluded that it didn't have a commercial purpose, but it didn't have a tax avoidance purpose either, what was the point? The whole point of the legislation was to crack down on people who were abusing the tax code to gain tax advantages. The fact that you may have some kind of odd purpose, to me, was neither here nor there. And the solicitors, they supported that because there was a standing instruction that if you wanted to refuse a clearance on the basis that its purpose wasn't commercial, you had to report to the board solicitor and get approval before you did it. But it never arose in my time because I acted as a sort of solicitor barrier because I just wouldn't allow it because it was just pointless. And I think that's obviously why they got rid of it. But it's got a knock-on effect, as we've seen some of the recent cases. I'm thinking of Dr. Allen's case, where the tribunal said that it's irrelevant whether it's commercial or personal. And I'm just not sure that that's right. But we'll come on to that stuff.
Well, I think the other thing is, with respect, the people at HMRC, including people who've been there a very long time and presumably come across a lot of commercial stuff in their time. And I know the people, for example, who run the current clearance unit. I mean, I trained with the lady who's the current boss, so she's certainly been in the department for a very long time at senior levels. But you don't get a feel for real commerciality. And I don't see that HMRC staff, at least these days, really are the best judges of what's commercial. And I think actually some of what's happened with the clearance unit over the last few years is indicative of that.
Yeah, but to be fair to HMRC, and I'm pretty sure there's a lot of people in HMRC who think the same way I used to think, it's quite insulting to say to, a trained inspector of taxes that, they don't understand what commerciality is. When they're looking at a transaction where quite often, the commerciality aspect of it is thin. So
yes,
I think we do need to be careful with that. And
I completely agree, but I'm talking about cases where there's clear commerciality.
Yeah.
I mean, we've just resolved an argument where putting in holding companies, and the argument was that if that protecting the profits of the trading company is not a commercial purpose because there's no benefit to the trading company if you alienate the money so it can't call on it if it ever needs it. And we kind of counter-argued, but that's the entire commerciality because it's not about making the profits. It's about making the profits and being able to do what you need with them afterwards.
Well, you'll know, Pete, I'm sure a few years ago, the clearance team started refusing a lot of 138 requests.
Absolutely.
Where it was just a group being set up on the basis that somehow or other there was no commercial benefit in setting up a group. I mean, a lot of those arguments were just spurious. So, you can take it too far both ways.
Absolutely.
Yeah. I think talking about the commercial purpose test, when we put in a clearance, how often do we do just a TIS clearance? A lot of the time we're asking for clearances which also have that commercial purpose. So we are normally explaining the commercial purpose.
Yes.
So the 138, the 139, the CPOS is a benefit to trade, not just commercial purpose. So you do often find yourself, 9 times out of 10, you are actually having to explain the commerciality sufficiently to get a clearance anyway.
The EOTs.
You see, and again, it's a mistake, and HMRC people make a mistake and people on the private side make a mistake of trying to make benefit synonymous with commercial. Because if benefit was synonymous with commercial, nobody would do anything. Because the whole essence of doing something commercial is you won't necessarily get a benefit from it. Because it's, a transaction. Commercial transactions, quite often, and in the type of areas that we're, mainly concerned with when it comes to the TIS rules, which is small, medium-sized companies and businesses, then the risk of not actually getting a benefit from a transaction is really high.
Yes.
So, we always should resist a situation where somehow or other this argument that I can't see a benefit flowing from this transaction, ergo it's not commercial. I just don't think that's right.
Well, the other thing that they have missed, and I think this was a point picked up in a case called Snell and Snell a few years ago, was that it is the purpose, not necessarily the outcome. So Mr. and Mrs. Snell wanted to do something for a commercial reason, and overall that was accepted, although they lost their case on the TIS point, and I think rightly so. It's actually one of my favourite cases as to how not to do something, because if you're trying to demonstrate that the tax avoidance element, or if you like, the tax benefit element is not one of your main purposes, getting your accountant to phone up the clearance team and ask how much they could have tax-free was possibly not the best tactic to deploy. But the point that was made in that case was that regardless of what the revenue thought about the commerciality of the transaction per se, the fact that it was done for a commercial purpose was the only test that one needed to worry about. So, absolutely right.
Well, people do mad things at the clearance stage. I mean, I can recall clearance applications coming in with counsel's opinion attached to them. Now, that is just bad. It's just bad. Mainly because of what the clearance team's approach is. They're looking at a transaction and they're making a kind of quick guess. Now, obviously, there's more to it than that, but it's a quick guess based on what's in front of them as to whether or not they're happy with why this transaction is being carried out. You don't actually need counsel's opinion to explain that.
No,
and another case, a Big Four firm sent, I think it was 3,000 documents with a clearance application. It was 2 foot, a pile of paper, 2 foot high. And I phoned them up and told them to come and pick it back up again. And they were grumbling about it. I said, well, okay, I'll send a refusal then. Just, there's no way.
Did they send 3 copies?
There's no way I'm letting the team struggle through 3,000 documents.
Absolutely.
I mean, I'm just trying to think how much I've ever sent with a clearance application, other than the document itself, which explains the transaction and explains what we're doing and why we're doing it, and then the accounts, because they asked to see that. There's very little other times I can think that I've actually added anything more to a clearance application. Than
when I got to technical division company distributions, I will get the name right eventually. I only worked there. Reasonably shortly after I got there, I got an application which was not at all unexpected because it had been announced in the press. One of the largest UK-based multinationals, but global organisation, was breaking itself up into 4. I'm not entirely certain how much I'm allowed to say, but for crying out loud, it's 28 years later. It's 30 years later.
You're getting old, Pete.
Yeah, I know. What's my name again? Sorry. So
he's getting forgetful as well.
It's 30 years on. I don't think I'm breaching the Official Secrets Act, but essentially, this clearance application was 220 odd pages with, and a lot of that was the step plan, Nick. Yeah. I mean, you know how you love your step
I do
plans.
love a good diagram.
But this thing had thousands of entities around the world.
Yeah.
Similarly, when I first left the Inland Revenue and joined KPMG, we had a client who broke themselves out. That's not covered by the Official Secrets Act. It was Tarmac and Carillion. And, the clearance applications, again, were dozens of pages, not dozens, probably over 100 pages because of all the global countries.
Yeah. But that's the clearance application. That's not the supporting document.
Well, I mean, in a sense, it depends how you describe it. But the 180 pages of diagrams of what's happening around the world and the bits and pieces that are being reorganized with, I don't know, Trinidad and Tobago being transferred to East Coast USA subgroup. Of course,
where it gets tricky when you've got a big transaction like that with multiple steps is Marwood Homes. And some bright spark, decides to insert some pretty unnecessary little point in because it gets a nice little tax advantage. And they end up getting caught. So you have to strike a balance between explaining the transaction in sufficient depth that HMRC can see precisely what's planned, but not having it so much that they're just going to spend forever hunting through it.
I mean, we get that question a lot from accountants and advisors when we're more acting in a supporting role and reviewing things for them, is how much detail do I need to go into? And I think the point is the clearance is only worth what what information you give them. And as you say, you don't want to give too much information that basically just means they've fallen asleep by the time they finish their letter, but they need enough information to actually understand enough to give them to give an answer, give an opinion.
Yes.
So there's no right or wrong answer in a sense.
No, I mean, I always said, and I said at the time, that clearance application should start with why you're doing this transaction. What's the purpose of this transaction? Yes. So that you clearly explain to HMRC right at the start, this is why we're doing this transaction. Yeah. Because that will do one of two things. It'll set the inspector's mind at ease that he's looking at he or she's looking at a transaction that they're expecting to be able to clear, or it will put them on alert that there's something about the transaction that they just need to be careful and make sure that it's okay, because it's unlikely if HMRC look at the purpose statement and decide they don't like it, it's hardly likely that anything that follows that's going to change the mind. So
what you just said is basically what Pete first said to me one of the first times I met him.
Yes.
And I think that's
because I trained them well.
There you go.
And I get a lot of people saying to me, will you review our clearance application? We don't do these very often, and we know you do. And that's probably one of the most common things I say. I know it's absolutely stupid because everything you've said makes perfect sense and you should get your clearance. But I would just simply take the whole commercial purpose chunk out from the bottom of the letter and put it at the top of the letter, because that's really where it belongs.
Putting on your clearance application, we're doing this transaction because Pete told me to. That's not good.
No. But I mean, you imagine you get a doctor's report and it says, we're going to open your chest, we're going to stop your heart, we're going to put a new valve in it, and we're going to close you all up again. And then underneath, a whole explanation about you've taken all these x-rays and discovered you've got a faulty valve in your heart. Oh, surely you would put that bit up front. You explain why you're doing something before you explain what you're going to do to resolve it.
The purpose of this operation is to give you your normal life back again.
Yes, exactly.
Therefore, the rest of it, you're thinking, well, I like the purpose, so I don't care what the steps are. I mean,
yes, exactly.
I'm going to have a hospital operation, so they're going to render me unconscious, they're going to cut me open, they're going to fix me, and I'm going to have a normal life again. Cleared.
And just to be fair, because I think I love Marwood Homes, because it's just so funny, the bit where it says that there was a note convening a meeting of the Exeter office of this, at that time, big 6 or 8 firm. And the meeting was to beef up the commercial rationale. Now, in the nicest possible way, if you are trying to persuade a body of persons, i.e. the clearance unit, that your main purpose is commercial, and you actually admit that you had to beef up that main purpose, that isn't going to stand you in good stead when a tribunal gets to review the transaction later.
Yeah. Should we talk about the process a little bit? Because we have taken some clearances to a tribunal, but you can't take a transactions in securities clearance application to a tribunal. No. So the clearances that have gone to tribunal for us are 138 and 139, I think.
Only 138, to be honest. Yeah.
So a 138 does have a process which can then be
Should we just
referred.
explain that that's the capital gains tax clearance for schemes of reconstruction at shareholder level and for share exchanges? So very common in either putting a holding company on top or in management buyouts in particular.
Yeah. So those 138 clearance and 139 clearances can be referred to a tribunal at the clearance application stage. If you get a TIS refusal, you cannot take that any further. You either do the transaction regardless or...
Well, I have had serious conversations with people. In one particular case, it was a firm of solicitors whose transaction had been knocked back and they felt unfairly. I must admit, I had a great deal of sympathy with them.
What, at the TIS stage?
At the TIS stage, yeah. And they were giving serious consideration about taking it to the High Court.
But what basis would they go to the High Court on?
I think it was discretion, really, operation of discretion and Wednesbury and all of that stuff.
That's just money for lawyers then, isn't it?
Well, yeah, and that's fine because we've all got to make a buck somewhere, right?
So when we're talking about TIS tribunals, those are tribunals where the transaction has happened and HMRC have counteracted. Pete, do you want to explain the counteraction process?
Before we do that, I think just to highlight... Do you remember the old Bishop case, the partnership case involving the accounting firms?
Yeah.
That's quite a good case for anyone who's in that situation. Not so much on the 138, because you can ask the tribunal to consider the application. And just to be clear, it's not an appeal. It's effectively transferring jurisdiction for deciding on the clearance.
Kind of another opinion, basically.
But with the TIS side, I mean, anyone who's in a situation where they think they want to challenge the refusal should have a look at the Bishop case, because... I just don't, there's no recorded example of HMRC discretion never being turned over in that respect. And the courts have never criticised the revenue in a situation where they've refused to give a clearance. So I think it's really important people recognise that. And the rationale for that is the public policy and people being able to get clearance is more important than people being able to challenge the revenue's decision, because you can go ahead with the transaction. And you've then got all the normal appeal rights that you would get if the revenue challenge you.
And this is something that does concern me slightly, because this, I think, is a very clear change of approach by HMRC over the last 10, 15 years or so. Certainly, it does predate Claire taking over the clearance team and the whole thing moving to London, from London to Birmingham. But in the old days, I almost said the good old days, but it kind of was the good old days. Yeah. But you should remember this, Ray, because when you're in charge of that team, as I understood it for a long time, and I remember having this conversation with Val when she ran the team 30 years ago, if you refused a clearance under TIS, you were pretty much saying, and I think this may even have been written down somewhere, you were pretty much saying, if you do this transaction, we are as likely as anything to actually at least start the counteraction process, which I'll explain properly in just a minute. Nowadays, and I kind of understand why, but nowadays this is all very different. And your average refusal of clearance will actually say, in effect, we can't convince ourselves from what you've told us that the obtaining of an income tax advantage is not one of the main benefits, or one of the main purposes, of the transaction. I'm doing that now.
Purpose. Very naughty, Pete. Very naughty.
But they will say we cannot be certain that the obtaining of an income tax advantage is not one of your main purposes. And what they're effectively saying is we can't clear your transaction. We'll, in effect, be forced to have another look if you do the transaction. What kind of feels wrong is that I can think of literally dozens of cases I've dealt with where people have said, screw them, and gone ahead and done their transaction, and they haven't even had a question from HMRC. Now, if you're saying, I'm going to have a closer look if you actually do it, in other words, either you do something different and I'm not bothered because I haven't given you clearance.
So you're saying it all went downhill after I left, Pete?
Yeah, of course. Yes. But, I suppose, from a client perspective, it's great. We've done the deal. We didn't get a clearance from the revenue, but they didn't challenge us afterwards. So that's fine. But it just feels like administratively, the revenue is saying, we don't like what you're going to do. So we're almost going to bully you into not doing it. And then those that do it, well, actually, we're not that bothered about it at all. And that's what kind of annoys me.
When I took over the team in 2001, early 2001, not following up on a refusal was endemic, really. I mean, it was 1 in 100. In fact, I'd say it 1 in 100. I didn't even think they refused 100 in the years prior to me coming. But following up on a clearance for a whole range of reasons, and it was rarely was it anything to do with them making a deliberate decision that they weren't going to do it. It was more often than not, they'd put the file away and forget about it. And unless it was raised by the district, which it almost never would be, the counteraction was so rare. Whereas I changed that system so that cases where, the file where the clearance had been refused were kept separate from the rest, so they weren't just put back into the filing range. And when you come back to a point that Pete made at the start, it's worth just reflecting on the fact that by the mid-70s, there was like 200-300 clearance applications a year. By the time I took over, there was 5,000.
It's now about 12,000, I think.
Yeah, and there was 5,000 138s, and there was a couple of thousand demerger clearances. There was 3,000 or so buyback of own shares, all that sort of stuff. So there was this huge volume of work, because not very long before I took over, the board actually used to sign off the clearances. So, the person who'd been my equivalent prior to me taking over used to trot over to Somerset House and get a board member to sit and sign so that was how the importance that they were looked on. Whereas by the time you get to 5,000, 6,000 applications a year, it just becomes a factory, and it's impossible to have all those kind of niceties.
Yes.
Everything then becomes not broad brush, but certainly there isn't the time to spend on it. But not following up on a clearance, refusal.
Yeah.
Sometimes the revenue will refuse clearance just on the basis that they don't want to say it's fine. They may not necessarily look at it. Because, I mean, it happened in my day. I remember there's a large corporate did a transaction involving tens of thousands of shareholders. Now, it wasn't an abusive transaction or an offensive transaction, but it was a type of transaction that the revenue just would never clear. Because as sure as eggs is eggs, a few months later, they'd get another transaction with 50 shareholders, and it would be the same transaction, and they'd think, oh, well, we refused that one, we better refuse this, or vice versa. And that would happen. And I remember a Magic Circle law firm complaining that when their clearance was refused, that the revenue had, in the dim and distant past, had cleared something which was the same transaction. And I had to argue with them about that. So quite often, you'd be in a situation you're thinking, will I refuse this? Will I let it go? And the decision's not ordinarily that you'll counteract it. You just don't want to be party to saying it's fine because it's not fine.
So
they're supposed to follow up everything that they refuse.
Right. Yes, and that's the thing that annoyed me. I mean, there were a lot of cases, and we're going to come on to Osmond and Allen eventually sometime. But there were a lot of cases around that time where people were reducing the capital of the company that they held, which was real capital that had been put into the company, which is something we can distinguish from Osmond and Allen.
Yeah.
And HMRC would flatly refuse to grant a TIS clearance. And yet the experience was that not one of the people that I dealt with, and I carefully advised them about what could happen and why I thought the revenues TIS challenge would fail, not one of those people actually had a TIS challenge, which I found very annoying. Interesting you should mention the one about many, many shareholders. We had a case which actually involved Cambridge, which is where we are in this.
Oh, I didn't actually say
run.
that at the start.
No.
We're in Cambridge, Trinity Hall, Stephen Hawking room. So we're among great minds.
Yes, indeed.
Presently as well.
Yes, absolutely. Where are they? But yes, so there was a fairly widely held organisation, group of companies here based here in Cambridge, which had a number of founding families. I think 4 or 5 founding families, but we were 5 or 6 generations along, so there were literally hundreds of shareholders, and they wanted to do a transaction. And when we applied for TIS clearance, the lady who was then running the team, I honestly can't remember her name, but she kind of wrote back and said, I can't give you clearance because, in effect, we have to ask the motives of all of the hundreds of shareholders as to why they will enter into this transaction. So we put out a template letter which the company's officers sent to all of the shareholders. And all of the shareholders would go along to a local firm of accountants. They might already know someone, or they'd just pick someone who would explain the whole thing to them and, for a fee would put the letter onto their headed notepaper and so on and so forth. And years later, I was at a conference and talking about something that actually wasn't TIS. But I was sitting chatting to the chap at lunchtime who was sitting on my left, who turned out to be one of those accountants in a small firm in Cambridge. And that subject came up, and he said, oh, yes, I remember that, he said, because there was a whole load of us small accountants in Cambridge who were very, very happy to get a little bit of extra business that year because, and I think clearance was granted in almost every case. So you do kind of wonder why they didn't just say, yeah, it's fine.
Protocols.
Well, protocols and the way your legislation was worded at the time, which was...
I assume this is before my time, Pete, but go back to the point I was making that, prior to me taking over, it was looked at, it was much more kind of refined air type stuff because the numbers were so much lower.
I think it would have been between 2001 and about 2004-05.
That would be my time, so that can't be right.
But it was, I know that all I remember is that the lady who was in charge at the time was profoundly deaf, which meant if we needed to phone up, we had to speak to one of her team because, of course, she couldn't deal with phone calls. I mean, she was very generally very helpful and very pragmatic. This is in the days when you could actually have a conversation with them as well.
I was about to say, let's be clear. Right now, you can't
again,
talk
this
to the
is
team
probably
anymore.
down to the numbers of transactions, the number of clearance
They're probably too
applications,
busy. They're probably too busy, and when you phone them up, they hear the same thing over and over and over and over again.
Yeah.
And then they've got all the people who plague them. They send a clearance application. It arrives on Monday, and by Tuesday afternoon they're on the phone. Where is it?
Yes, absolutely. So you asked me to a long time ago.
When was that?
Sometime last Tuesday, I think, to talk a little bit about the process. So very simply, the thing about the transactions in securities legislation is that if it's about avoiding income tax by taking a capital sum, then the thing the revenue can do is to effectively say we'll have the income tax instead. So the legislation was actually vastly clarified in 2010, and essentially it says you look at what you paid in tax, look at what you would have paid if you'd received a dividend of the same amount, and we will counteract the income tax advantage and collect tax of the same amount. Now, as far as I'm aware, for about the last 25 years, the only counteraction mechanism that has been used is to raise an assessment to income tax. There are other things. You can refuse a repayment, require a repayment of a repayment already made. You can ask them to restate their accounts.
All that stuff's just theoretical. It never happens in reality.
Not anymore, essentially. So nowadays it's always an assessment, and that usually goes out. Well, I'm not sure if I've got any post-2016 cases. There was a really bizarre process pre-2016, which is faintly relevant to Osmond and Allen, because what would happen is the revenue would inquire, then they would decide there's a case to answer in effect, and they'd tell you so with a preliminary notification. And then if you disagreed with them as the taxpayer, you, or more likely your accountant, would kind of issue your statement as to why the revenue was talking absolute drivel. But this had to be a statutory declaration. So,
well, it had to be the taxpayer it was a declaration by the taxpayer.
Absolutely. But of course, their accountant would help them write this, and then they'd go and find a friendly lawyer who would charge them 50 quid for putting a stamp on the bottom of the page to make it a stat dec. Then that went to HMRC, who would then produce their own counter statement, in effect, actually, which they did not have to share with the taxpayer at any stage. Then those two documents went to the tribunal, first-tier tribunal, and a judge would look at it and either tick the box saying, yes, there's a case to answer, or the box that said, no, there isn't. And assuming, as happened in most cases, but not every case, intriguingly, they ticked the box saying, yes, there's a case to answer. Then HMRC had to actually issue the counteraction, well, technically had to decide whether to then issue a counteraction notice. And certainly nowadays, or up until all the cases that we're looking at that include Osmond and Allen, that were up to 2016, that counteraction notice would be accompanied by a tax computation and an assessment to income tax. All of that was done away with in 2016. So the process is very different now. There's a formal opening of an inquiry procedure by HMRC. At the end of their inquiry, they either issue a no counteraction notice, which has to explain why they've chosen not to take any counteraction. I don't know if anyone's seen any of those yet. I think they're still stuck on 2016 cases, to be honest. Or they issue a counteraction notice, and that's it. And I think the level of backwards and forwards that was in the old, somewhat archaic system was based on everybody's fears from 1960, when it all first came in, and when everything was perhaps a little bit more gentlemanly and civil.
And so few cases.
Yes.
When you look at the old process, you can see, if you actually think of it in the context of just a handful of cases a year, it makes sense. When you look at it in the context of potentially hundreds of cases a year, perhaps thousands of cases a year, it doesn't make any sense.
Yeah. I mean, if you look at the clearance responses we get, quite a few of them, especially the smaller ones, which are quite clear and we have absolutely no doubts with, are marked NR for no review these days, aren't they? So a lot. I don't know what no review means. Someone obviously has to look at it to decide it's not worth taking any further. But obviously they have a process, but probably because of the level of applications they're getting, that they have to say, this one isn't worth taking further.
But you see also, whilst 2016 formally brought capital gains tax recognition within the TIS rules, prior to that, the revenue's practice always was to look and see what. So if you actually looked at the TIS rules prior to 2016, the fact that they paid some capital gains tax was irrelevant because the legislation didn't provide for it.
No.
So you could counteract. So let's just say, for argument's sake, that the income tax would be 100,000 and they paid 90,000 in capital gains tax. The legislation would allow the revenue to counteract 100,000.
Yeah.
But revenue practice was such that they took into account the capital gains tax. And quite often they would look and see that the capital gains tax paid, the differential just wasn't worth all the hassle of a transaction securities assessment, and they wouldn't bother in that situation.
And there's actually court approval of that, isn't there? I can't remember which case it was, but it said...
That's where a lot of these practices came from. And coming back to the point I was making, earlier, when you're a revenue inspector and you take over the transaction securities rules, you think, the world is your oyster. You've got a piece of legislation that you can apply in numerous situations and bring in lots and lots of extra revenue. And you suddenly discover that not only is the legislation limited, but when you factor in how the revenue actually operate it, transaction after transaction after transaction, you suddenly find that it just doesn't apply.
It's not the money.
So, and I think that's why it got the reputation as a place where tax inspectors went to die. And why, when I took it over, people asked me, were you mad taking over? And I said, no, I'm going to go in and transform it.
Shall we mention some of those limitations that HMRC have? So, Pete, you mentioned just now about the revenue will counteract and tax it as a dividend. The company has to have reserves to do this.
Yes.
So,
well, more to the point, if the company doesn't have reserves, then you cannot have been avoiding income tax on a dividend that could have been paid.
Yeah.
So the legislation refers to a lawful dividend, and some of the jurisprudence says
the contrasting approach doesn't work if the company doesn't have distributable reserves.
Exactly.
Yeah. What about if a company could have distributable reserves? So, for instance, when we talk about how do you create reserves so you can pay a dividend, you've got £1 million worth of share capital, so just reduce it.
I think, the legislation, again, from 2010 and particularly from 2010, because the big sort of overview, if you like, of how the legislation is intended to operate was implemented in 2010. I know that the big changes in 2016, but they were of a different nature.
Yeah.
So in 2010, you went from this kind of very vague, if you've kind of got reserve, in fact, if you're avoiding income tax, we'll come after you. You've got a very specific, can you pay a lawful dividend? Now, there is a question around when you pay it.
Yeah.
Because the question really is, what is the transaction in securities? Now, this is not trying to get kind of philosophical or quantum, looking at the picture there of Professor Hawking. But there's a case called Greenberg, which is wonderful because it's about Mr. Greenberg and his son, Mr. Greenberg. And they actually did a transaction before the 5th of April, 1960. I've never understood the significance of that date. I always thought it should be the 6th. But if you read the case, it's the 5th of April, 1960 that is constantly brought up. But the payments for the sale of the shares were largely made after that date.
Yeah.
And it's difficult to work out from the House of Lords judgment what the ratio was, because basically there were 5 judges, 3 of them slept through the whole procedure, and 2 of them wrote judgments. I may be maligning them, but they're all dead now, so there's really nothing they can do about it. I hope they are.
We can come back and point you, Pete. Your next clearance application will be refused.
I was going to say, we're not getting a clearance application again, are we?
But one of them basically said that the receipt of a lump of capital, i.e. a part payment for the shares, preceded by the payment of a dividend by the company, were together a transaction in securities. But the more sensible sounding answer was, and I think it may have been Lord Simon who said, a man would be somewhat concerned to find that he'd sold his house, i.e. completed the transaction, if he hadn't received the proceeds.
Yeah.
So in other words, there has to be, at least based on that one of the two judgments in Greenberg, a question of when has the transaction in securities completed?
Yep.
Yeah, and the debenture case is, I think, more important in that one, where the debenture is issued in the 1950s.
Yes.
But it's not repaid until after the TIS legislation becomes active and they get caught. And their argument was the transaction in securities was prior to 5th of April 1960. And the court held that the tax advantage arose after that date, therefore they were caught.
Well, also, surely the redemption of a debenture
is in itself a transaction.
Exactly. I mean, that to me has always been blindingly obvious, but obviously not to some people.
Yeah. So are we saying, therefore, that just to be clear on this point, the payment of the cash is the date that we need to be assessing things like the reserves? And
well, I'm not quite sure what HMRC's current position is on that, because a number of the cases stacked up behind Osmond and Allen that I am aware of, at least 4 or 5, I know that the actual proceeds were not paid until materially later.
But come back to the point you've just made, though, Pete, what's really critical there is to be sure that you're dealing with a security in the first place.
Yeah.
So if you pay the cash on something that's not at that point in time a security, and I mean, the obvious one is you sell your shares and the funds just go onto director's loan account or something like that.
Yes.
So it's sitting as a credit on director's loan account. It hasn't come out of the company at that point. The revenue probably wouldn't counteract it at that date. So if you then pull the cash out, say 5 years later, the revenue will argue combined effect and all that kind of stuff, because the simple director's loan account's not a security, or typically you wouldn't expect it to be a security.
Well, if they didn't, it would be very easy to avoid TIS, because you just say, we'll do the transaction now, put it all to a DLA, take the cash out 6 years and 1 day later, and they can't counteract us.
So quite often the revenue will argue that the DLA is equivalent to getting it in cash.
Yeah.
I think there has to be a distinction between a loan account where the company has the cash available, so you could have drawn it. It is, if you like, just available to you. Whereas there are also cases where it goes onto a loan account because the company hasn't got the money anyway. So, and in those cases, I think you're closer to a Greenberg position where you can't say you were paid until you could actually have drawn the money.
Yeah.
But none of those points have been tested yet. I mean, I suspect some of them might be in some of the cases that are going to follow Osmond and Allen. Should we maybe, just because we've only been going for an hour, should we
not
actually?
Quite, yeah. If you're not watching the hourglass, you've got 7 minutes left before that hourglass runs out.
Okay, but shall we talk briefly? Well,
We're in Pete's world. Time goes by faster.
Yes, that's right. Well, we're in the world of,
I suppose, quantum mechanics
physics
and all that
cosmology,
kind of stuff.
And yes.
So are you saying you want to talk about Osmond and Allen?
I feel we've kind of naturally reached the point where we've spoken
Well,
around.
it's time to talk about motive, because we've talked around how the legislation works, its history, all that kind of stuff. Now's the time to talk about taxpayers' motive, because at the end of the day, that is the most important thing.
Let me pause it here.
Okay.
Because the tax hour is no longer an hour. So let's have a little pause, and then I'll restart and we'll make this part 2.
Okay.